Hello, welcome back everyone. This is Seewing Yi, and today I'm going to discuss your portfolio architecture of your strategy for real estate investors. All right. And so be prepared for a nice surprise. This is Seewing Yi, and I'm going to share with you this screen. And now this type of investment methodology over the past 20 years, the time that I've been around, was a real estate wealth advisor for hundreds and thousands of turnkey real estate investors throughout the country, buying out of state, buying remotely. This turnkey methodology, portfolio architecture, acquisition plan has been tried and true for a very long time. So in this unique space, in this unique investment world, over several decades, to my knowledge, this has proven to be very successful. So let me dive deeper into this methodology. So most important thing, any small or mom and pop real estate investors, wherever you're located, California, Midwest, or whether you're located in Northeast, and you live in a very expensive market and in your neighborhood, you're unable to find a capital properties that can make numeric sense, then perhaps you need to venture into other states and surround yourself with a very credible, very reputable turnkey provider that will give you some great turnkey, ready-made, ready portfolio, whereby they have in-house professional property management and the whole 9 yards. They will, each team in a specific market will help you to do everything, all the dirty work for you, while you, as a hands-off turnkey remote on-site wisdom lessons, enjoy what you want to do things that are important to you, and delegate things that you do not want to do, and delegate all the laboring efforts to your team in this case. With that said, where you buy, how you buy, what location, what type of asset class is critical. I'm using this single family home, some are new construction, some are older resale homes that have been rehabbed extensively by the turnkey providers, in-house rehab team, inspection team, appraisal team, the whole 9 yards. They find the properties for you. They spend the money rehab for you. When the house is completely rehabbed, it's ready to satisfaction to everyone else. And then this turnkey provider will provide you with this off market properties only you'll have access to. That's the key of successful investing, scaling your portfolio hands free. So you could, whether you buy 5, 10, or 15 of these cash flow turnkey properties, it does not matter because you will not spend very little time, any time, on a weekly or monthly basis. Enjoy the quality of your life, enjoy your financial freedom, while your real estate architecture portfolio will gradually improve day by day, week by week, month by month, and year by year. And long-term, 10 years or beyond, your potential property portfolio will perform to your fast satisfaction. You can achieve financial freedom using cash flow liquidation and or other ways of triggering and withdrawing the property. Specific location, you have to invest in the right location. I would certainly do not want you to invest in the cyclical market in the western region of the US because those homes are very expensive and the rent relative purchase price does not make sense. So therefore your cap rate and your cash on cash return is very minimal if you invest in the west of Mississippi. So my recommendation for you is diversify your asset allocation with single family home up to 4 unit. This is the core type of asset class. And either you buy certainly in the Midwest area where the cash flow is very high, but purchase price is very low. However, those homes are maybe in a C class or C plus class neighborhood. and very old property. Some of you do not like it. Or you buy investment property in the south and southeast, whereby the properties are a little bit more expensive, but you're not going to get as much cash flow, but you get a little bit of appreciation. So that could be an idea for you. And I'm going to show you a specific market, a hybrid market, which is low risk market that have decent cash flow, meaning your rent to value ratio is around 0.08%, and the cash on cash return is around 6 to 7%, and your cap rate is around 6%. I'm not going to go over the numerical formulas. That's for another video, another presentation, or you can look at my YouTube channel. You will find those numerical formula training on my other videos. With that said, I'm going to give you a potential portfolio acquisition in Alabama and Tennessee, which is a very good hybrid market that you could really do and what have you. So I'm going to start off by showing you this new construction property located in Tuscaloosa, Alabama, for only, and I said only, what's the price? Only $230,000. You're not going to find many new build single family home with this such a low price, great value, especially in Alabama, which is very hard to find, and get a projected rent of $1,600 to $1,700 at 25% down payment, or maybe a 6% mortgage rate and 25% down payment. You can achieve monthly net cash flow of around $300. This is a great metric. And so this is a rare new construction available that doesn't come around very often. Of course, those kind of homes get sold very quickly by those out-of-state investors. The other really portfolio you can look into in the Alabama, Tennessee corridor, hybrid market, like I said, is not a cyclical market. It's not a pure stable market like you do in the core Midwest area. So it's sort of in between. The home prices are anywhere from $140,000 to $250,000. So this is the sweet spot in this region of the U.S. Like I said, most investors for several decades have achieved very satisfactory long-term growth and financial freedom using these type of portfolio acquisition. And these homes, like I said, they're around 30 to 50 years old, but they've been rehabbed down to the stud, and you go rent ready, and you work with a turnkey provider that's been around for more than 10 years. They have a great track record of helping artists and investors. So it's all about trusting a team in a specific market, since especially when you're located very far away, thousands of miles away, you have the ability to buy this turnkey cash flow, totally managed by a specific turnkey provider, in-house property management, the whole 9 yards. They will do everything for you long term, so you can sit back, relax, and collect your mailbox money. So let's dive deep into a typical property. There are several new construction homes, 245K, 230K, new bedroom to a bath, or 240 square foot. And the price, like I said, 230, 240, and the gross monthly rent, in this case, $1,675, in this case, $1,650. So this is the sweet spot, meaning, like I said, 25% down payment, and a mortgage rate about 6%, could be lower, and if the seller will buy down the rate for you, you can get better interest rates, and you get better cash flow. But typically, the monthly net cash flow is projected to be around $200 to $300. That will be something that should meet someone's investor's expectation. Okay, so right off the bat, you have a very limited new construction, which is the most desirable property. This low price of new construction, if you look at from a perspective of a nationwide offering, you will not see another market in the U.S. that can offer you this type of high value, low cost new construction, especially in Alabama. So that's all I have to say on that. And the rest of this portfolio are resale homes, like I said, quite old, 40 to 60 years old. But again, they've been completely rehabbed down to the stud, turnkey, ready to go. Oftentimes, the renters are already in there. Once you close escrow, cash flow from day one. So these are cookie cutter. All these numbers look good. The rent value ratio, the cap rate, everything really are to be expected in this kind of market. Again, buying and hold. We'll discuss the big picture toward the end. So let's go with the number. This resale 219K, rent for 1750. Again, a good cash flow, couple $100 monthly cash flow minus all the debt service. So let's go down here again. 198K, rent for 1550. 190K, rent for 15 something. So all these, look, the turnkey provider know what they're doing. They know what are the expectations from an artist investor. They know the expectation of the cash flow at the purchase price and all of those returns all been projected. So this is a win-win situation for the buyer, for the investor from out of state, and for the turnkey provider. Everybody know their role. Everybody know the expectation. So as long as you know the expectation, you work through the team, and then you're good to go. Just sit back, relax, let your 1, 2, or 3 rental may buy over time or more. Just sit back, relax, and let the team do all the hard work while you could do whatever you want to do, not worry about your portfolio not performing well. All right, so let's go over the rest of the property, 189K, rents for 1475. Some of these properties have been rented, some or not. When you close escrow, the property management will easily go out there and find the right tenant. Just to reiterate, right now, the rental market is very strong in most areas in the U.S. Right now, more people are renting than ever before due to the skyrocketing of both prices in the past 2 years during the pandemic, and the rising mortgage rate has really put a lot of people back on the sideline, unable to qualify to buy a home. So those massive high number of people cannot afford to buy a home, so they have to rent. They might as well rent from you. For Alabama and Tennessee, this region of the U.S., this hybrid market, the assumption is there are many more renters than there are houses for rent. So you should reassure yourself that you could have very little vacancies, very little maintenance and upkeep, and what have you. So you can have a hopefully very smooth transition year over year, whether you buy one rentals or more than one in this particular hybrid market, such as fast growing Alabama and Tennessee market corridor. Does it make sense? So this prices are very reasonable. We're talking mid 100s. You get a 165K, what is homes. Some of them are 3-bedroom, 2-bath, some are 3-bedroom, 1-bath. Well, you already know the square footage, right? That's what you get, right? That's what you get for this price. Look, not many places in the US you could find rentals with this kind of price, 130, 140K, right? With this size and with this rent to go along with it. I mean, we're talking, if you put 20 to 25% down payments, the total out of pocket is 30 to 40 grand. So you're only putting 30 to 40 grand for your 20 to 25% down payment and get this return, get this yield and cap rate situation. What more can you ask for? Your ability to leverage and what have you. 148K, 147K, this is the monthly gross rental projection of all meet the expectation of everyone in terms of numeric analysis and what have you, cash flow, the whole 9 yards. Look, some of the prices are, look, 126K. It's a really good price. At the end of the day, as I keep saying this, look, it take a while for someone to get going. Buy your first rental. Hopefully you have a good experience. Then once that happens, and you have the extra money, you can buy your second rental a few months later. So systematically, you'll scale your portfolio knowing that the in-house property manager will do all the legwork for you. Pre-screen your tenants, and if your tenant is possible, there's some maintenance required. The local maintenance team, the rehab team will do all the work for you, and they send you a bill, they send you an invoice, and they're deducted from your gross rent. So it's automatic. The property management will help you create a portal or a link where you could, but in real time, you'll see on a monthly basis, daily basis, what's going on with your property. The property management will upload all the transaction with respect to each of your rental. You'll see would it be on any kind of rehab or necessary, minor or major, whatever. Really, the way you manage your properties, look at the property management online portal. Okay, everything is real time. When are you getting the rental check? When property management connected to the rent from the tenant, they will take their 8% or whatever property management fee. If there are no expenses or maintenance on a particular month, you get the net amount of the bills checked into a checking account. That's your mailbox money, right? Auto system, everything technology is really helping the real estate investing industry. You can do this for lack of better word, you can manage your portfolio, your kitchen table to be exact. This kind of system, this kind of investment model has been very successful over the years, continue to be, and because of technology, what have you, the advancement of technology is affecting many industry or no different with the real estate investing industry. Everything is getting a lot easier. It's not easy to become computer savvy to understand technology. It's very simple, very interactive. So really, what a fun way to create wealth through scaling this kind of properties. All right. So at the end of the day, I just shared with you one investment methodology is to buy a portfolio of turnkey single family home up to 4 units in a specific market just through asset allocation, build cost averaging, and buy as many rentals as you can buy over time and invest for long term. At the end of the day, I always conclude that rental property is the world's most attractive, is the most prudent, is the most tax favor real estate investing, multi-dimensional asset class, and it pays you 4 different ways, not just positive cash flow monthly. It'll trigger tremendous amount of tax benefit. It'll trigger long-term appreciation potential for your properties, and it triggers leverage, OPM, other people's money. You're using the lender's financing capability to leverage your investment. You're only putting 25% down payment, and the lender will risk their 70 to 75% loan to value because you have good credit or something. Then your renter, by the way, you're going to outsource all your debt obligation, including your mortgage payments, to tenant. Their monthly gold check they paying you will pay down all your monthly mortgage, your taxes, your insurance, your property management fee, and 5% vacancy factor, 2% maintenance factor. And then at the end of the month, you still have monthly positive cash flow. Then over time, you will raise your rent because inflation will force you as a landlord to raise your rent. So your cash flow, your rent will continue to grow over time. At the same time, your tenant can systematically pay down your loan. So over time, in the next 3, 4, 5, 10 years, your value of your property grows, right? And then your loan balance decreases. So your debt, your DTI, debt to income ratio, will expand. When your debt to income ratio expands because your value of your properties appreciate over time, and your debt service decreases over time because your renter is making you rich. Your renter is pay down everything for you. So essentially, your renter is making you rich. You just put out the initial down payment, at least on the initial property. Now, subsequent properties, when you obtain adequate equity over time, when you achieve 70% loan to value on any other rental property in your portfolio in the future, you have the capacity to do a cash out refinance, cash out the equity of your homes, tax free, and use those equity to buy more rental properties. That's how systematically achieve wealth over time. Is it going to be easy? Of course not. Does it show a lot of commitment, a lot of dedication on your part? Of course, yes. And the most important of all is you can overcome all the factors you cannot control. What are the factors you cannot control? You cannot control whatever's going out there in the world. All those negative headlines are out there, right? All the noise out there. You have to shut out the noise. Shut out the noise. Focus on your goal. Focus on your plan. Even if you probably lose value at any given time, who cares? You're not going to sell your property. You're going to invest over long term. When you invest over long term, you can overcome any short-term correction that may occur in any given real estate cycle. As we're seeing right now, we're seeing a relatively minor real estate cycle the last 18 months. I still call it minor correction. Nothing to be worry about because you're not selling. You're collecting rent. You're collecting positive cash flow. Who cares if your value of your property or not going short term? Because you have a long-term viable strategy. You will invest for 10 years or more. History dictates that your properties will increase in value. All right. So that's all I have to say. This is my big picture. So anyway, so hopefully you see a lot of value from this presentation. If you have, please smash the like button and subscribe to my YouTube channel. And finally, subscribe to my email or my website below. And part of our real estate investment community with several thousand members we have already over the past 20 years. And then, of course, you will receive free updates every week on all aspects of real estate investing, regardless of where you live, any part of the country or any part of the world for that matter. We'll have the ability to invest successfully on a state remotely and passively using our investment methodology. And not only are you have the ability to invest in the portfolio I just described to you in Alabama, Tennessee, great up and coming market, and these other opportunities in other part of the U.S., low cost markets, fast growing like Florida and Texas, also at part of the Midwest. There are some opportunities for you through our network of membership, so to have access to. So become our insider. And then who knows, we could be a very successful losing investor when it's all said and done. Okay, that's all I have to say. Thank you so much for listening. My name is Seewing. I will see you on the next video. Have a nice day. Bye bye.